Happy Monday. It is the Monday after Thanksgiving. I am sure that you are all just ready to rock and close out this year strong. Am I right? Well, if so, I have great news for you because today I have a special guest on with us. I have Brian Rogerson. He is the CEO and president of Wallick Volk. And Brian runs our cash buyer program throughout the U.S. He is our trusted partner in this cash buyer program. And today we're going to do a deep dive into this program and show you just how beneficial it is for your buyers. This is a buyer product. It can also work, of course, if your sellers are buying, but it is such a cool product. I believe one of the most underutilized products that we bring to you here at Zoodealio. And so because of that, I thought, what a great way to take today and share with you this strategy, dig deep into it so that you have a really full, robust understanding of it, because I know it is going to be the game changer for your buyers. It's a tough market. Affordability is so tough right now. Interest rates are still so high. And so this product can truly separate you from the sea of sameness that is out there in resi real estate. So I'm glad you're with us. Thank you so much for tuning in, and welcome, Brian.
Well, thanks for having me, Kayla. It's always a pleasure.
Well, we certainly appreciate you. You know, Brian's really a visionary in this space. And when we learned about this product years ago, we're like, this is genius. It is exactly what is needed to really give buyers a competitive edge in the marketplace. And especially with today's times, I know it was real popular during the multiple offer season. But Brian, if you could just give our viewers and listeners today a little backstory on you, and then give us the backstory on Cash to Win, which is our cash buyer program.
Okay, well, I've been in the mortgage industry since 1987. I was actually drafted out of high school as a shortstop into pro baseball, but I did the unthinkable and went to college despite my father and mother going, "What are you possibly doing? Why would you go to college?" Became the first college graduate ever in my family's history. And then ironically, the next college graduate in my family's history was my oldest daughter, and then every kid I've had since, which I make that sound like it's 6,000, but it's only 4. So yes, I've been in the business for a long time. I've seen everything. You know, the business in the days of the 80s was just about whatever your payment is, and it wasn't about interest rates. Rates were terrible. Everyone knew they were terrible. It was about, okay, if you want to own a home, what's your budget? Oh, you can do it for this. Okay, we're going to work backwards, tell you exactly what you can do. Actually, in those days, the clients found the loan officer first, figured out what they could do, and then we actually referred them to real estate agents that could actually put them in homes. So it was a complete flip of the today world.
Okay, wait, before you move on, I want to touch on that for a second, because do you see that as being a future trend? I've often wondered if we're going to see a little bit of a role reversal to where the loan officer gets the buyer first and then refers it out to the realtor. Do you see that? Is that happening?
It's definitely, well, it already happens in our footprint in that our loan officers know how to, hunt and look for clients that they can then work backwards to their referral partners. The biggest issue is that the whole evolution has changed, right? But you're seeing it with like Zillow and Rocket and everybody. That's their objective. They fail to do it, right? And the ironic thing about a mortgage loan officer is this: is I could be working with your sister and not knowing who you are, right? And she pre-quals, she qualifies for everything. Blah, blah, blah. We're 100% a go. And the minute she gets to you, the agent, you control where that person's going, even if they've already done that. So the consumer direct is probably heading in that direction, but it's going to be a slow growth trajectory. I don't think it makes the majority, but I could picture a day of like 50-50, which would still be very good for the consumer because they're much more equipped to be ready to really fly. And that's what this whole cash to win does, right? We're enabling people to be something that nobody else is typically they're competing with, except for the all cash person.
Yes, and I love that. So For those that know me and listen to me, you know that I am a data nerd and I really look at a lot of data. And I think one of the compelling things that I've learned since I, was introduced to your Cash to Win program is that cash buyers have a competitive edge in the marketplace. I mean, we all know that. It doesn't take a data scientist to understand that. But the amount of a discount a cash buyer gets over history has turned out to be about 11%. There was a big study done by the University of California, San Diego, and they went back and analyzed 40 years of historical mortgage and purchase applications or purchases. And what they learned is that those cash buyers had this tremendous competitive edge against financed buyers. And I mean, 11%, like we're talking, that's a huge amount of money. And so that cash buyer is going in with a leg up and more likely to get a really great deal. So talk to us about this program and how it can really help not only the buyer, but also the realtor.
Yeah, I mean, so to go back a few years, you mentioned it earlier, which was we needed to turn our buyers into cash buyers just to compete in what was a seller's market, right? So at that time, we had people we were converting into cash buyers that were bidding up the property $50,000 to be the winning bidder. So money was flying. They were putting down large down payments. They were paying above ask. The sky was the limit. They were going up against institutional investors. They were going up against private investors, and they were just going up against pure cash buyers. So we were able to start talking to the listing agents and say, look, they're all going to pay the same thing. Do you want an institutional investor to be in that neighborhood, or do you want my client that's going to live there and get to meet all the other neighbors that you might have done business with to be that person? So then now over time, it's shifted towards balanced, and now arguably by some people's accounts, it's probably buyers, right? I think it's a buyer's market, maybe in Arizona. Other markets, maybe it's balanced. I don't think it's sellers in too many places, although Washington State stands on its own world when it comes to that. So what we do is we take qualified people that would otherwise have to compete with other parties. In any market, there's always some competition, right? There's typically some competition, and we turn them into cash ready buyers. So back to your point about the value of cash. So we'll have a lot of real estate agents say, oh, it's complicated and it's not worth it. Well, A, it's not complicated, and B, it's 100% worth it. And more importantly, if you're trying to differentiate yourself from everybody else, and I'm a big fan of differentiate or die, and in every decade of my mortgage career, it's been done different than the previous decade. So if I kept doing it like I did in 1987, I wouldn't be here today, right? And you're seeing that in your industry, we're seeing that in our industry. So you have a client that has the capacity to make a cash offer with us standing in their place, and then buying that property at a reduced price, and then us turning around and using that reduction for leverage like a 2-1 lender funded buy down. Just a 2-1 lender funded buy down. Put somebody in a home today that's been sitting on the sidelines. So, to give you a quick example, we've done one recently. And in fact, I just signed the contract today. It's in Wyoming. It's a VA buyer, and he's getting a 2-1 lender funded buy down. He's going to save over $500 a month the first year. Well, if you really believe that rates are going to drop, then this program is perfect for you, because we give you a low rate for the first year, a rate in between for the second year, and then a market rate for the rest of the time. Well, if you expect rates to drop as I do in the next 24 months, the refinance opportunity is there to set the forever rate, right? So, the whole, date the rate type of thing. We make dating the rate not so expensive because the payment's lower. So when we use our cash, we buy the house at a discounted price. In that particular example, it was $20,000 under the ask, and we're closing in 10 days. So think about a traditional model transaction for any of your agents. Now, let's say you're going to do a typical 30-day close, which became the norm, right? It used to always be 45, 60, then 30 became the norm. And I think it's probably still more 30 than any other number, but we'll just call it a 30-day close. Yeah, we're going in to that property with the mentality of a 30-day close for the consumer, but we're coming in as Wallick and Volk with cash, and we're going to close in 10 days with cash. So if you're the buyer's agent representing the Andersons on this hypothetical example, in 10 days, once you just get through inspections and know that there's no property issues, we are buying that property with cash, and you are fully paid as the buyer broker on that transaction. By the way, so is the listing agent, who is going to like your 10-day cash offer. Only contingency is a satisfactory inspection, right? And then what you end up doing is spending the rest of your time trying to find the next person to do this with. And we move to the part you hate, which is the mortgage side. So you don't have to ask where the CD is. You don't have to ask the title company if they've got an addendum. You don't have to ask the consumer for a clear copy of their driver's license for the 7th time. You're not involved with any of that. We've already made the commitment to the consumer that we're going to give them a mortgage. We put our money where our mouth is, which is we bought that house with cash. We better be ready to give them a mortgage, or we own a property that we don't have much equity in or any equity in. So that's the mentality of it. So now back to your original point, and sorry for going on so long, but
oh no, this is great. I love it. I love it.
To your point, cash is king. And if you don't believe there's a value to cash on every single property or transaction, you're grossly you're just missing the mark, right? So some it's more, right? Properties that have been around 180 days. Well, that might be a very low offer. We offer cash and try to create as much leverage as possible. Maybe it's only been 60 days, but now they have needs. These people needed to be out of that house already, and they needed to have that sold or whatever. So finding the leverage to justify it is simple. Our cost is 1% of the acquisition cost. So if we buy a property for $500,000, we're charging $5,000 to cover the double escrow, the expense of maintaining it all, acquiring the property, holding on to the property, and then getting our end consumer into that property. So take an example of, a $550,000 house bought for $520,000, $525,000. Okay, that's $25,000 to $30,000 under ask. The real estate agents paid in 10 days. It barely changes their commission at all, right? The little bit of difference in the purchase price for cash doesn't move the needle for that. It makes it not worth it. But the bigger favor you did your consumer was you created that differential as leverage for us to work with them. All right, what's most important to you? Well, I make a ton of money. It's not about the payment. I don't have a ton of cash, so I need you to cover my closing costs. Okay. The next one. Well, what's most important to you? I have just enough money to put down, but I don't have closing costs, and everyone's shutting me out saying no one will pay for closing costs anymore. Well, this program's automatically a seller concession program. We're the seller. We get to dictate the whole transaction. We haven't had a client that had $10,000 or $15,000 put away for closing costs. And I said to them, okay, well, what if we put that into the transaction and we give you a seller concession for $15,000 to cover all the closing costs on the transactions? Why don't you take that $15,000 and pay off just 2 credit cards that are costing you $480 a month? So it was like a debt consolidation purchase, because money that would have 100% been gone was freed up. So you cannot argue that I did not put $15,000 in their hands to use elsewhere, because we did. If they bought it the way the agent was going, which was traditional financing, inspection period, appraisal contingency, mortgage contingency, close in 30 days, people would have bought the house, they would have been in the home they loved, and they would be happy. The difference is my way, I got rid of $480 a month in credit card debt, freeing up cash that could have been used in a different direction. It's not monopoly money. I mean, obviously there's a cost to it. It's built in, but it's still, structurally speaking, way smarter use of your money than the way that we've been doing it traditionally. And what's the stumbling block, Kayla? People just keep doing it the same old way.
Yes. I mean, I love what you said, and I'm going to steal it. Differentiate or die. I love that. And I think that we all know in real estate, especially us realtors, we all know that we're at this inflection point and we must differentiate. I mean, things have to be different going forward. And as I think through, and oh, by the way, can you believe all the drama, the last minute drama with the NAR settlement? I was floored. DOJ coming in and basically saying, we don't like it. We don't like these signed buyer agreements. I just couldn't believe it. At the last minute, they threw up those those objections makes me believe that they're going to be coming back for the NAR in the future. Maybe FTC is going to be coming back for NAR in the future, but remains to be seen. In any event, especially with all of the changes, what we know as realtors is that it is time for us to show tremendous value to the consumer. And when we're working with buyers, I just cannot think of anything more valuable than showing them how we can put them in such an amazing position in a home, in an interest rate. You mentioned some creative ways to use this program to pay down debt. And you've also, in the past, I've heard you talk about how this is commission insurance. So tell me a little bit about how it's commission insurance for the buyer's agent.
Oh, yeah, in a traditional offer that you make on any property, right, with a 30-day close of escrow, you are, well, let's hope it's 30 if you've got the right lender, but many lenders, you're 40 days away from closing, right, because they never close on time. And there's like a 10-day extension at the end for all things that should have been discovered right up. In fact, I have a popular video that's called Make Your Problems Day Appropriate. So in other words, I don't have an income problem on day 35. I had an income problem on day 1. As a loan officer, what was I doing that I did not see there was an income problem? You know, all these things you always hear about, oh, the underwriter said this and all that crap. It's a bunch of bunk because we knew for 3 weeks that was their income. Just because no one looked at it until it went to the underwriter doesn't make it the underwriter's fault. They did it wrong. But back to the whole scenario of commission insurance. In a 30-day standard close of escrow with financing contingencies, appraisal contingencies, and all that, like a lot of things can happen, right? And one of the things that can happen is they could lose their job on day 25. You did nothing wrong, and you're out your commission.
It's
using
happened
cash.
to me.
Using cash, we're on a 10 to 15 day turn time, depending on what you want. And we get you in and out and get you paid so that you can go on to other things. And I'll talk a little bit about how to market this in a second. But so the commission insurance is that you've got to survive 10 days versus 30 days in the life of the consumer. Okay, I think I've shared this with you before, but we had a consumer lose their job after we acquired the property with cash. It was no longer Kayla's problem. I didn't call up Kayla and say, hey, could you ship back that commission? They lost their job and we might lose money here. So just ship that commission on back. And while you're at it, can you get the listing agent to do the same? Because I'm sure you guys will all do that, right? So the commission insurance is that you are in and out as quickly as possible so that all of your time and energy can be focused on how do I do another one of these? To the consumer side of the equation, as we said before, we've got to find a way to give you a mortgage now. We've got $600,000 out on the street that we need to get back in the form of a sale to the end buyer. And we have an obligation to make sure that works out for all parties, right? So, you know, we're going to work our rear ends off to make sure that mortgage comes together. Or in the case where they lost their job, they were freaked out like we were going to throw them out on the streets. I'm like, for starters, that defeats the whole purpose. You are a professional. You're going to get another job. She did in like 3 or 4 weeks. And we closed a month later. Now, it's not optimal, but stuff happens. We're equipped to deal with the stuff. So I think that's the big thing about the commission is like, why would you put yourself in this position when you could put yourself in this position? And it's not about greed, because if you think about it from an agent's perspective, you can easily justify your position. I didn't do this for my commission. I actually lost a few bucks because we worked on a cash offer with a lower strike price. So I made less going in on your behalf to set you up for the success that you're about to have on the way out the door.
Yes, no, I love that. I love that. You know, you talk about the strike price. I want to go into that in just a moment. Before we do, I just want to share for anyone that is listening, how do you access the Cash to Win program? It's really easy through your Zoodealio platform. You would just go to submit a buyer on your left-hand menu, and you'll also notice that in your offer dashboard, the cash buyer tile does appear for you. If it doesn't, that is because maybe you're in a market where it is not quite available yet. So if you're looking for it and can't find it, just reach out to me, reach out to support@zoodealio.com. Of course, you can always reach out to Brian, and we'll link his information in the recap of this webinar today, so you'll have that. But so Brian, so the first step is the buyer gets cash approved. And I would imagine it's a little bit more in depth than a typical pre-approval for a loan. Let's talk a little bit about that. How long does it take to get cash approved, and what can they expect that you will need from the buyer in order to get that cash approval?
Well, ironically, it's the exact same process I used every single time as a loan officer, which was I actually got my clients' tax returns, W-2s, pay stubs, and bank statements so that when I issued my pre-approval, it was worth the paper it was printed on. Somehow in our industry, it's become okay just to print those things off a cell phone while driving 80 miles an hour in the US 60, having not even pulled someone's credit report, and then put people through hell by accepting offers for non-qualified people. So the process is for us is basically the same, which is if we pre-qualify one of your referrals, we make sure their credit works, we make sure their ratios work, we have their income documents, and we're off to the races. And while that happens, and we say, you know what, Kayla, this person fits completely into the cash program, get out there and start showing them properties that you're willing to make an offer on in the name of Wallick and Volk, and you've been through it before, so we don't need to see the house, right? You and your client are doing the exact same thing on Saturday that you would have done with or without me in your life, which is you're looking at the few properties, trying to make educated guesses to which is the best one. They're working through the numbers and figuring it all out in their budget, and they want to make an offer on this property. And literally, you make that offer of cash, at a discounted price because you want to obviously do that. If you need my advice, give me a call. I'll be the bad guy. I'll give you the number to start with so you have someone else to blame. Your client's insulated from this whole process. So it's no longer the Andersons that are making a lower offer on that property. It's Wallick and Volk, who's willing to pay cash. And in 10 days, and if you want cash in 10 days, we're willing to pay $570 on this $600,000 house, which is not egregious, by the way, right? But it still frees up $30,000. So during this whole process of you already being out there with your client, we have taken that loan internally and already gone through underwriting. We only need like 24 hours for it anyways, but our loan officers know the client qualifies, but we're not ending it there and taking any chances while you're out showing those properties, which nothing gets bought and sold in the first 3 hours, right? I mean, it's like you may not even see them for 5 days to start showing them properties. So that immediately goes into the system. The underwriters, it all goes in as a TBD, to be determined, CTW, cash to win. In other words, we're paying cash. Don't screw this up, underwriter, because we're going to come back and you're going to approve it later on because you made us pay cash. So make sure you know what you're doing. Let's figure this whole thing up front. But I'm a huge fan of front loading. I think the system should be front loaded. That applies to how you talk to your clients and what their goals and desires are. And in our world, it includes maybe sometimes this much paperwork. And we need to look through it, make sure we're not missing anything. Don't miss that side business where they write off all their income on their Schedule C. Make sure you know what you're doing. And by the way, there's programs to ignore the tax return. There's W-2 only programs. So we need to do our jobs the way we originally did our jobs as loan officers by being a loan officer. We used to be smarter than the underwriters because we had to be in order to make a living. We've got to get back to that world, and your world needs to step up as well and act differently than all the others, because the definition of lunacy is doing the exact same thing and expecting different results. And we live in sister brother industries that do that on both sides, loan officers and real estate agents. We are the walking definition of lunacy. I've been doing the exact same thing for 2 years and it's not working. What's going on? What's working is you're doing the exact same thing and it's not working. That's what's going on.
Oh yeah. Don't even get me started on that.
I know. I could see.
Those tuning in though, I think the agents tuning in, they're a different breed, which is good. And so Brian, you mentioned that you would share with us kind of like how to market this. So what I would love for you to do is share with me, if you were the realtor and you were talking to your buyer, how would you describe this program to them and the benefits of it and maybe the drawbacks to it?
Yeah. I mean, I would let them know that I have a lending partner that could put them in a position to acquire this property potentially for a much lower price than we could ever acquire it for by coming in the traditional way, which is with a financing contingency and appraisal contingency. If you speak to them, they'll find out if you're a proper candidate. And if you are, this could create all kinds of leverage for you in the way of lowering your monthly payment or buying down your interest rate permanently or eliminating other debt with cash that's freed up. I don't know your personal circumstances. We don't get into your world like the lender does. Let them look at your situation and make suggestions for you, but you have nothing to lose and everything to gain. As the real estate agent, why I would do that is this. How many agents have lost sales on either listings or the buy side because their client finds out that their brother-in-law's sister just passed the real estate licensing, and now what was your client and the extended sphere of influence becomes somebody else's client because someone that's got 0 transactions under their belt now becomes the listing agent or the selling agent on a transaction. When you play in this arena, you don't have any competition with this. So when your buyer buys a home and maybe saves $700 a month on their monthly mortgage payment for the first year with a lender funded buy down, for example, they're going to tell other people. And the path to that wasn't you just go out and do it. It is not a just go out and do it plan. You've got to deal with Kayla, and she has a lending partner that does this all with cash and figures out this program on our behalf. You need to call Kayla. See, you've separated yourself automatically. You differentiated, not died, right? So you don't have that problem of every single second aunt's cousin's brother's wife is a real estate agent, because that's the loan officer business too now. You need to have something they don't have. And with Wallick and Volk, this is exclusive to us. We don't offer it on a wholesale basis. We don't offer it out to anyone outside of our lending sphere. We're a smaller company, but we have resources. We're looking to build our world around the people we build our world around. And my saying to all the loan officers here is, I don't care what everyone else is doing. I only care what we're doing, because that's all I can control. I can't control what they're all doing. Here's how we're going to do it. And we're going to make a difference, and we're going to create real value. We're going to be able to show with no ifs, ands, and buts that we created real value. There's no hypothetical to it. It's just numerics, right? There's no emotion to it. Thank goodness, because I'm horrible with emotions, right? So basically, here's the numbers. Here's what you got to do with it. Here's the net result of it. Does this make sense to you? No, I'd rather spend all that money out of my pocket, and I don't mind my $700 a month mortgage payment every month, said nobody. But the other side of the equation is, if you don't, as a real estate agent, put them in front of the opportunity and just keep doing it the traditional way, yeah, you'll sell properties and you will get your commissions, but you will be the same as what you were previously when you've got an opportunity to be different.
Agreed. Couple things that I want to touch on, because I really believe it's important for you to know, that watching, listening, and that is, others say they have a program similar to this, but they don't. And when Brian was talking about how, Wallick and Volk, they close in 10 days, they actually will close in 10 days. If that's how soon you would like the close to be, obviously you could choose a little longer. If the seller wants 14 or 21, you can choose that. But the point is they take their money, they buy the house. Period. This is not a bait and switch. They're not working the entire escrow time frame to try and get your buyer, through a traditional mortgage and then slam that through at the last minute and switch to a mortgage at the last minute. So talk to that a little bit, Brian, because I hear so many other people, in fact, as we're looking for other partners to offer this programs in markets that you're not in, what we quickly discover is that it is not a cash buyer program whatsoever. It's a bait and switch program.
Yeah, it's a play on words, Kayla. I mean, I've seen at least a half a dozen of them that they advertise as cash, but if you read the fine print, it's a cash guarantee. We guarantee that if we get down to the day of closing and we haven't put this whole mortgage together, that we'll pay cash, provided it's got nothing to do with us. As long as if we made the mistake we'll pay cash. Well, they're never going to say they made the mistake. They're going to tell you about the consumer not getting them certain documents in time. They're going to talk about a new credit card that showed up on their credit report and changed their debt ratio. They are never going to cash guarantee. And my running joke with the real estate agents, because I have zero filters, and you've come to appreciate that, and I know the rest of the people over there understand that. But I'll get real estate agents that'll look me right in the face at like a live event and say, "I've got that program." I said, "You're right. You do have that email from 2 years ago you haven't opened. How's it working for you? How much business have you done with it? How many more referrals have you gotten because of it? Oh wait, that's right. You got the program. It's the guaranteed cash scam program that's sitting in your inbox." The other side of the equation is even the ones that might do it, they're third party and they're triple or more the cost, but they're also not controlling the end transaction. So it's a nightmare for the consumer. We are putting our money where our mouth is, literally. It's like we are literally putting our money where our mouth is. And by doing such, we are making a commitment to the consumer that we're here to close. In fact, when we rebranded this company a few years ago, it used to be Mortgage Lending Since 1932. And it's a great honor to be around since 1932. But what I didn't like about it was people would see the 1932 and start thinking, they're probably dinosaurs, right? Like, well, it doesn't mean I was here in 1932, although I may look like that on your screen. So we went to committed to closing. Pretty simple. It applies to the consumer, it applies to the real estate agent, it applies to the referral partners, the wealth managers, whoever's sending us that consumer. We are committed to closing, because otherwise we don't do anything. We practice, we pretend, right? If we work on a loan for the sake of just working on it, it's not the Home Depot. We don't get paid by the hour. You don't get paid by the hour. I don't get paid by the hour. We get paid for results. We are committed to close. And this cash program is the highest level of commitment you could possibly ask of your lender.
Agreed. And I'm so glad you underscored the reality that your fee for this program is only 1%. And compared to maybe the few others that copycat have something similar, we've seen triple the fee. And so your fee is, I believe, very palatable, especially when you consider you can get a lower strike price, as you call it. So I want to walk through just give me a real live scenario with numbers, kind of share with me maybe how one has played out, or maybe you've negotiated a much better price because maybe the buyer didn't want to go in that low and offend the seller, but because you were coming in cash, you're like, let's start here. So kind of walk us through a real live example and share with us what's possible.
Yeah, so like on a real live example, we did this maybe a month or two ago now, and we basically had a property that was listed for sale at $510,000, and the consumer qualified from a debt ratio standpoint. They had the down payment. Their closing cost funds were extremely tight, and was a little concerned about, is it the right time to buy? Which the right time to buy is now if you don't own a home. So there's your answer for that. Anyway, so it was a $510,000 house, and we did the math, and we offered $485,000, which is not that insulting. $25,000, right? $25,000 off of $510,000. It was an institutional seller, and they just kept coming back with numbers like in $1,000 increments. And every time they came back at me, because I don't have any emotions in it, I just simply said, no thanks, $485,000. No thanks, $485,000. There was a total of 5 no thanks, $485,000 before. Guess what happened? We had a $485,000 contract. Okay, so for sale at $510,000, purchase for $485,000, right? So there's the visual, right? Barely any difference in anyone's commission. Closed in 10 days. So his agent was bye-bye, see you later, off to Dirk's Bentley or whatever. Okay, so now we got this $485,000 purchase price, and we designed a mortgage program for this consumer at a $505,000 resale price. So it was still under the original list cost. We created the leverage between the $485,000 and the $505,000 to pay our 1% fee. But most importantly, we covered a 2-1 lender funded buy down with the differential. which, lender funded buy downs are not a mystery. You actually just prepay the difference in the payments for 2 full years into a slush fund, basically. So its physical cost is the exact savings that the consumer gets year 1, and then the exact savings that the consumer gets year 2, and that total came out to like $11,000, $13,000, whatever it was, and that gets put into the mortgage, basically in a reserve account. So now the consumer who was worried about making payments on this $500,000 and $5,000 house is saving $749 a month year 1, and roughly $400 a month year 2. So what protection did that offer? Okay, well, is it the right time to buy? Interest rates are going to go down. Okay, I've got you covered because I gave you the lower interest rate already for this first year. So if they somehow come down to this, refinance, lock it in forever. Okay, but if they don't, you're welcome. 749. I should sing that Moana song as part of my what can I say besides you're welcome, right? So you save $749. All right, now year 2 comes. This amazing economy hasn't changed. Interest rates have not gone down. They stayed the same, right? He's still at a rate that's lower than market was at the time by 1% in the second year. So he goes from $749 below what he should have paid or would have paid the way most people do it, now to about $400 less. He's got another whole year to see if the rates drop, and if they do, refinance. Year 3 comes, rates are 9.25%, and his end rate was 7. You're welcome. Because what's the risk? If the rates go up, I got you covered because I already gave you a rate and you know what it's going to be. If the rates go down and it makes sense to refinance, we're going to help take you out and put you into a permanent situation. So we've got the market covered both ways. Now, is it for free? No, we're using the value that we derived with our cash to fund that differential, right? But if he was walking in there as a 5% down borrower needing 3% concessions to cover his lender funded buy down, do you think they would have come back at 485 and said that works? No, they would have been at full price, maybe full price, if they even accepted that, right? Now that we're sliding into more of a buyer's world, more and more property sitting, more and more opportunity is sitting, that strike price, which I don't even know if it's a word, I just use it all the time. And I can tell that it's not a common real estate term because like a lot of times the realtors look at me like, what the hell is a strike price? But it's just the way my mind thinks. Like we're trying to find that sweet spot to make this all happen. I think that spot's getting lower, right? I mean, that house has been sitting on the market. You've seen the number of reductions it had. Now you do have to take into account they've already reduced it, right? So you could still, if you freed up 25, 30,000 on top of what they've already reduced, that's a lot of money having not walked in there in month 1 and paid the list price. So we're doing a service. I know Elliot always jokes around that it is for everybody. I argue it's for most. So Elliot, we're not for everybody, it's for most. So the most of the people could benefit from this.
I completely agree. And yeah, and Elliot, Elliot and I have a lot of conversations about this program because we both love it, like a lot. And it's so frustrating to us that more realtors don't use it. And we kind of have a theory as to why. I mean, just like you said, we do things always the same. It's easy, it's comfortable. But we also kind of feel like sometimes the agent has such a great relationship with their lender. And when they hear about the program and hear that they'd have to use another lender, it kind of freaks them out a little. And I get that. I mean, having been in real estate for decades, I definitely understand what it's like to have your trusted person. But I guess what I'm sharing with you is that you owe your buyers, you owe them the opportunity to explore this and to really see if this is something that could benefit them, because it is for most. It really is. It's such a beautiful program. And I'm curious if you have any questions. If you're listening in, drop them in the chat. We can get to those questions. Anything else, Brian, on this topic? I want to pick your brain for just a couple minutes on a few other things, but anything else on the Cash to Win program that you want to add here?
Yeah, I mean, I do have the solution for your last example. Just we don't need to take the business away from you. We'll just hire the loan officer. So now your loan officer can have the program and still you can have that relationship with someone that's going to have more to offer, not less. So, that is one solution, and we've had that happen already. So with that, pick my brain.
I love it. I love it. You're solution orientated in your mindset, and I love that. And I think that when looking at this program, most probably other lenders would look at it and say that's way too risky. We're never going to do anything like that because it has inherent risk. I mean, you are buying a house that you're not reselling to that buyer for a couple more weeks. So there's definitely some risk involved. But I love that you're seeing the world differently and trying to find a way to make buying a home easy, seamless, stress-free. For me, those are like the inherent benefits. You talk about the cost savings. To me, that is just a cherry on top, that we could structure a deal in a way that would save the buyer money. The other things are, for me, so important. I believe in convenience and certainty, and I think that those are such key elements of this program as well. So I want to pick your brain, though, because our audience, we're realtors and we're finishing out the year and we've got a month left. There's going to be a ton of folks that take their foot off the gas and enjoy a time with their friends and their family, which is great. No disrespect there. I love it, especially if you've had a great year, you're going to take some time off. Wonderful. On the other hand, I think that there's tremendous opportunity right now to finish the year strong. And I'm curious, Brian, what you're sharing with your loan officers on what they can be doing to really make this year all it can be and finish out strong.
Well, for starters, my favorite line from my loan officers are their holidays, not holimonths. And I start seeing, because I'm in a lot of different, groups, different people talking about the pie pickup day for November, whatever, and it's like September. I'm like, there's got to be something better to do, right? So the work you put in right now is going to show up in first quarter results. Most people take this quarter off and don't think much about it, but what you didn't do this quarter, you're going to pay for next quarter. So it means really you're not going to get started till next quarter, which means you're in the second quarter of next year before you start to see any results. So if you get sucked into that vortex of not still working through the holidays, and maybe they are days, not months. So, I get the days around each side. In fact, when I came to this company in 2012, they were open the day after Thanksgiving. I was here literally 1 year, and the day after Thanksgiving was just shut it down because we're wasting our time. We're not going to get anything done. No one's going to be calling. No one's going to be asking us to do anything because no one else is doing anything. So I just succumbed to the fact that we just take a 4-day weekend and move on. So if you're not putting the effort in right now and pushing hard in this time, and this is, by the way, what better time to get a great strike price than right around the time they tell you nothing's going to sell. Everyone just succumbs to the fact that nothing's going to sell. Well, it's not going to sell because no one's making any offers. How about making some offers that benefit your client in a way they would have never benefited during the spring season, for example, if it starts turning the other way? This is the time to take advantage of this program all the way, because you are going to have an opportunity of seeing more properties that fit their needs, but also having more opportunity to make offers that fit their needs because they're not seeing any other offers potentially right now. So I just think it's a great time from that standpoint. I mean, to me, every day is a work day, so I'm abnormal. And my wife will let you know that if you ever get to meet her, it's not normal. I sign offers at 11 o'clock on a Saturday night, maybe even after being at the brass tab. So I just hope that they're very good offers because I'm just signing them, right? Because that's the other part of it is you're running the show. You guys are making the offers. I'm just happen to be the signature that takes place. And then we start to negotiate to see if we're going to turn that into a final deal. But if you don't start doing this today, you're going to put it up. I'm gonna start working out on January 1st. Why is January 1st when you should start working out? I mean, it's no different for loan officers or real estate agents. Everything we're not doing today, we're gonna pay the price for come January. Everything that we're trying to do quickly in January, looking for immediate results, aren't gonna happen right away anyway. So now we've pushed ourselves off into maybe March. So don't get caught up into that trap. It's okay, like you said, take some time off, enjoy your families, do whatever you got to do, but keep your foot on the pedal all the other days that you're not doing that, so that you don't go backwards 6 months and take half the year trying to, you know, recover from not working the other half of the year.
Great advice. It is they're holidays, not months. I love that. Never heard that one before. Definitely rings true. And I'll be reusing that too, Brian. I love your little one-liners.
Just don't use my sarcasm. You can use the lines in the lovely way that you could speak them. Just try not to be as sarcastic as me as I say it.
All right. I'll work on that. So final question for you. And again, thank you so much for your time today. I really appreciate it. You know, I appreciate you prioritizing, spreading the word about this and really giving us the nitty gritty of how it works. So thank you. And
well, thanks for giving me the forum too, because obviously I'd be speaking to no one otherwise.
Yeah, of course. We love this. We love this program. It is so beneficial. You guys, you have to try it. Once you try it once, you'll love it. Your buyer will love you. They will refer you. It'll be amazing. Okay, but the last question for Brian. I know that your crystal ball is probably on its way from Amazon now, and you may not have it yet. But I want to ask you the rate question because all of us are wondering. I mean, you know, everyone came out with their rate predictions for next year, but I want to know, where do you think rates are going and what is that going to look like heading into 2025?
I think they should go down a little bit. I don't think they're going down to any type of refi boom type of number. You know, I always say to everybody that when it was 2 3/4, it was fake anyways. It was propped up by monies that didn't really belong in that arena, but it was all just propped up. It was make believe. And actually turns out to be one of the worst things that's ever happened because it's created stagnation with people being stuck in a place because they can't leave that mortgage behind. They can never afford anything else. It also created people buying properties they probably couldn't have afforded, but because they got such a low rate, they jumped up higher than they should have, where they would have been so much more comfortable getting where they should have been. So I think that, you know, in order to accept 5% rates when the world is thinking 2 3/4, you got to get up to like 8. So 5 sounds good, right? So we saw that happen already. And now, but look at over the last like 30 days, we've had Fed cuts, right? 2 Fed cuts, and rates have gone up nearly a point during that process. Now, there's a lot of behind the scenes going on, which is the value of the loans in the secondary are a fraction of what they used to be, which when the money starts flowing back into, you know, 10-year treasuries and all of that stuff, I expect rates to come back down a little bit. But I'm talking, you know, maybe in the 5, 5.5 when it's good, maybe 4 3/4 is a great rate at some point. So I don't see this thing going from 7 to 3. So, you know, when you think about that, you know, is that enough to justify not jumping into the equation? Which, by the way, if rates do drop unexpectedly, as they always do, they go up unexpectedly, they go down unexpectedly. In fact, in my entire career as a mortgage loan officer, everyone says to me, Brian, what are rates going to do? And I always say the same thing, change. And I'm right 100% of the time, because that's what they're going to do. But if the rates actually start to drop, the real estate market's going to pick up and the values of the homes are going to go up to accommodate all the people that are flocking back in as buyers. So, well, yeah, you picked up a point in rate here, but you lost 40 grand in purchase price over here. So the quicker you can become a homeowner and understand that your house is a place to raise your family and to create generational wealth, long-term wealth, and that you're not Warren Buffett, so you shouldn't be trying to time out. If I can't time out the market, you can't time out the market. And I've just sold real estate in California, and I just did that in this quarter. So was it the right time or not? Time will tell. But I sold it and I moved on to something else. So I mean, it is not a situation where you have to be thinking like you're Warren Buffett and I've got to figure out this algorithm to buy a home. If you don't own a home and you have a family or you are aspiring to have a family and you have the ability to own a home, now is the time, because you're paying yourself, you're reducing your principal balance, you're getting even normalized appreciation. A year is bigger than what you put that money into anything but your cyber coin world. And basically, this is a great way to create generational wealth. Real estate is the pathway to most people that are millionaires in this country are millionaires because of real estate. It's the number one pathway to be considered a millionaire, which is just a net worth thing, maybe not, sitting on $1 million in cash, but you got $1 million in equity, which puts you in that category. You can't get there unless you own a home and find that path.
I love it. Great advice. Rates will change. Another
They
good
will.
one. Another good one, Brian. Well, appreciate you. Again, thank you so much for being here with us today. And I hope you enjoyed today's special webinar where we dove deep into the Cash to Win program. If you have any questions, please reach out. We just invite you to reach out to us. And we will link Brian's information in the description. And then if you're getting this from the replay, we're going to link that in the email as well. So thank you so much, Brian. Appreciate you.
Thanks for having me.